Hey, welcome to the Closing Beat, everybody. Happy Thursday. How we doing out there? All is good? Welcome. We got Paul and comments, and Taco, Marcus, and Matthew, and Liliana. Beautiful. And Doc. Mark, how we doing today? Good stuff. I love it there. Welcome, welcome. Hey, yeah, sort of a joke there with the title, right? It's the worst day of the year for the stock market. Yeah, technically it was, right? We're losing over 1% in the stock market there. But of course, we were down like 0.47% on Monday, and then, or Tuesday, and then yesterday was positive and everything. And so what we have here is this sort of interesting short consolidation, right? We need some kind of a catalyst to get us going here. We just don't have it at the moment. Let's make this a little bigger so you can see. And we just don't have it. Like there's a lot of pessimism in the markets right now, and I would say pessimism persists, right? To sound fancy. But there's just a lot of, or I should say there's a lack of a good reason to get you excited to buy, right? If you're a technical trader, you're like, I don't like the way that looks, right? If you're some kind of a fundamental investor, you go, well, yeah, I know that like the markets are kind of fairly valued and kind of discounted, but not really. And so it makes it really difficult to be someone who jumps in right now and says, this is the time to get to work. Yes, something, right? You could definitely put money to work, but to say you're going to go 100% in right now is really, really tough. Now, today we had the ADP reports come out, which were really the cause of our problems here. 235,000 jobs added. We were expecting 150,000. So lots of jobs being added to the market there. We also had initial jobless claims and continuing jobless claims come out, and they were better than expected. And so it's like, okay, well, that's dropping there. Add that to the Fed minutes yesterday, and you just have this sort of cloud of bearishness hanging over the market for the moment. And that stayed pretty much throughout the day. Every rally during the day that tried to give you a little boost would pretty much just faded away, and then a pop and a try to get going, and then it would just fade away. So yeah, I mean, well, one positive way to say it is, so today was the worst day of the year. That means yesterday was the best day of the year. Well, so that's something there. We gained about 0.75% there. And we're still looking for that catalyst to get you going, at least for the S&P anyways. If you look at something like the NASDAQ, is continuing to add to its 2022 losses, down 1.1% year to date already. And that's not being helped out much by the likes of Apple and Microsoft, Google, Amazon, Tesla, or I'm sorry, I should say Alphabet, NVIDIA, all of them just super weak to start the year. And so that's kind of the moral of what's happened today. Same with the Dow, and the Dow was one of the best performers, or was the best performer last year, and it's still also looking for its catalyst. What's going to keep it moving higher? So still that pressure remains there. The Russell is the best performing area of the market so far this year. You can see the difference just over the first couple of days. Just like a little tiny uptrend there, but that's pretty much it as far as that goes. To kind of explain, like, we manage our own funds here at Jazz, so we get to see a whole lot of positions all in one shot. Our best performing stocks in all of our funds today were Chinese and Brazilian. So it gives you an idea. Like, I love looking at all of our portfolios and then going, where's all the action today? I could see it like in a second, right? Because you can break down all the stocks. And so unless you had anything Brazilian related, whether it's like Petrobras, things like that, or over in China, which didn't have a great day, but still a lot of individual stocks did well, there just wasn't much to get excited about, unless you had like energy here in the U.S. To be fair, SherwinWilliams was one of our worst performers. We happen to own SherwinWilliams, and they had a tough day. So if you look at Sherwin-Williams, how did it finish? Down 6.7% there. Now, this is not anything wrong with Sherwin-Williams individually. Yeah, I don't know if you know this, but historically, Sherwin-Williams is owned by mutual funds and index funds. So this is just broad market selling that actually caused that pain today. I mean, I would say, you know, obviously some of the funds changed their mind and decided to sell it off, but about 80% of the stock is not owned by individuals on a like first level kind of a basis there. So that's probably what's going on there. Looking around the sectors here, I got some interesting things to point out. Communication services, the best so far year to date, and that's because of Disney and Meta. So these are, oops, not Mets, Meta. These are your best performers right here. And I think a lot of people would welcome that because Disney obviously had one of its biggest sell-offs ever in a year last year. And Meta, yeah, obviously that was a horrible year, just getting crushed there with their reset. And both of those stocks are already up over 5% year to date, so that's pretty cool. If you look over in the real estate space, you're going to find today wasn't great, but it's the second best performer year to date. And I would say to dig a little bit deeper on this, in real estate, people, you don't take it as a broad, oh, it's real estate, why are they interested? The action in the real estate sector right now is in logistics and there we go, and cell towers. So Prologis, right, these are one of them up 3.5% so far this year, even with today's decline. You got American Towers, also higher on the year, pulled back today, so it kind of gave back most of it actually. And then Crown Castle. These are where the action at least started off the year, Crown Castle being the best overall there. If you look, you know how sectors are made up of individual stocks. If you look at some of the more physical real estate section of REITs, like Avalon Bay is probably one. Yeah, new lows on Avalon Bay. In fact, this was one of the new lows today. There were only 5 new lows in the markets today. 1, 2, 3, 4 of 5 new lows in the S&P today were physical real estate. Extra storage space is one of them. We talked about that yesterday. Probably public storage space is the other. Yep, and in fact, a new low there. And Avalon Bay being one of them. So people are interested in REITs, but they're not interested in physical real estate at the moment. And, you know, that makes sense why you would expect something like that. Home builders. I'll stop on this one here for a second. We talked about home builders being holding up. Right, and being maybe something you want to look a little deeper into there. I'll point out some stuff here for you real quick. Let's see if I can do this and this works successfully. Yeah, not bad. So the 30-year mortgage rate obviously has come off of its highs here just a little bit, but it's sitting at 6.6-ish% versus a high up here of about 7.33% there. Still, mortgage rates are basically at levels we haven't seen in 20 years, right? You got to go all the way back to here. That's June 2002. We pulled back a little bit, so I mean it's basically right at 20 years there. The drop in mortgage rates certainly has helped out. It's helped in, if we look at some of the econ news that comes out, purchase applications being one of them there. We generally have been seeing that recover there, but in the final week of 2022, look at what happened here. I'll do originations in the form of refinances. Look at that. Ew, right? Horrible decline in the area of refinances there. New purchases, meaning new mortgage originations. See if that plot's on there. Yeah, look at that. So we're scaling, the chart's scaling because of what I'm adding here. But sharp decline there. That was the largest reversal, actually, which is about 12% week over week decline there. That was the largest reversal we've seen in a few months. Actually, you got to go back to September to see that. Refinances now down to the lowest levels they've been since about 2000, so that's 20-year lows there. Not a good time to be someone that specializes in refinances there. But again, despite all of this, what's going on? You look at the home builders, not the XHB, look at the ITB. The ITB is not only holding up strong, but moving higher while the markets are, falling. That's what's going on there. So real relative strength here, and that's becoming more and more noticeable by the day. Look at the volume in the background picking up there. People are recognizing that I want to put money to work in relative strength. I want to take money out of the energy sector and take my tax gain and all that stuff, and I want to find a place to put it to work. Where do I put it to work? Well, the home builders are holding up for some weird reason right now. And so that's what's going on there. To stretch out just a little bit more, I gave you guys a list. And just so you know, like I can't tell you individual stocks, but I'll give you a list here. And what I did is I sorted them by their 1 month returns, because over the last month, really 2 months, we've had a good run here. So I put 5-day returns, which are just, short term. But I put 1 month returns, 3 months, 6 months, and then I put the dividend yield so you could see. Best performers inside of here, Meritage Homes, Toll Brothers, and Dr. Horton. Congratulations. 7%, 5 and 5% there. 3 month returns go to Dr. Horton and they go to Meritage as well. You might look at Taylor Morrison. It's a smaller company, though. They don't, are smaller than the others. And they don't pay any dividends there. But as far as the raw returns, your Dr. Horton stands out as the best, 28.2%, paying a 1% dividend yield. Of course, that's over the year. As you work your way down the list here, you can see which ones are weaker. They're going to start to move outside of actual home builders. And this is what I'm trying to point out. Home builders, aside from Mohawk, home builders are all right here for the most part, even the bigger ones and the smaller ones. Down here, when you get towards who's underperforming, see how that's not a home builder? Those are home builder support companies. So you all know Floor & Decor probably. You've seen the stores around the area there. Home Depot's an obvious one there. So we're starting to move outside. There's Lowe's in here somewhere. Lowe's, Sherwin-Williams, there you go. So we're talking about that again. So that's a quick way to go through top-down analysis, where we look at the stock market, we look at the sector, we go down to the, we were talking about REITs a second ago, we go into the industry of home builders and say, what's going on there? There's something really unique happening despite a lot of weakness that didn't just happen today, by the way. This weakness has been pushing lower and lower, refinances and things like that. So that was your lesson of the day, in other words. Wine and Wealth tonight. We are talking about the Secure Act 2.0 and all the geekiness that's wrapped around all of that. And I hope you'll join us for that. If you're one of our clients, we do this every Thursday. So you get homework every Thursday. We're teaching you or updating you on something, hopefully that helps you get your dough straight. And so we'll be back a little bit later to talk about that. Stocks in the news for the day. Ooh, Bed Bath & Beyond. Yeah, that's right. That's an accurate chart right there. Bed Bath & Beyond trading at $1.63. They essentially said, we don't know if we're going to go the bankruptcy route, but even if we did, we're not sure we're going to be able to make it past that. They're already late on paying some of their debts there, and they are not going to be able to file one of their important filings called a 10Q. They won't be able to file that on time because of their possible restructuring. That's not a good sign. That's not a good sign. So they could be the first in this cycle of the big retailers to just be done. You may no longer see Bed Bath & Beyond. Amazon in the news there because they are going to be cutting more jobs. In fact, if you look at all the job losses in the economy right now, it's all tech related. Everywhere else seems to be adding or maintaining jobs. So really interesting there. And you can go back to the jobs numbers that we just talked about a minute ago. We have new jobs being added. They're just not in tech. So Amazon did their biggest round of job cuts. It's the biggest amount of jobs lost or cut out of any of the tech companies here so far. Not good. By the way, if you're looking, when they first announced their job cuts, right towards the end of the year, it didn't really impact the stock price, so it's not really a meaningful area to show you. The number that they're going with now, 18,000, is 80% higher than their original announcement of cutting jobs there. So I just want to point those two things out when it comes to all this, they're cutting jobs, and IBM is cutting jobs, and Microsoft's cutting jobs and stuff. Yeah, it's kind of all the tech companies. So rather interesting there. Other stocks in the news here. What do we got? Let's go back one more. See if we can do, oh, I keep typing it wrong. That's what it is. T-Mobile. So T-Mobile, can't seem to type. There you go, for goodness sakes. T-Mobile in the news there. Good news for them, actually. They added 6.4 million new lines and 2 million broadband clients there. That was above almost every single analyst's expectation, and that's worthy of a 2 1/3 gain on the day. Dell, yeah, they're still around, still doing their thing. Dell is going to start moving some of their chip production out of China starting in 2024, presumably coming to the States. I don't know for sure, but it would seem that they are trying to bring their work here to the States. and wish them well. ConAgra, just a great earnings beat. I don't know why I can't. I think my battery's dying or something here. Let's go like this. ConAgra. Let's see what happens. CAG. Yeah, it's just dying or something. So we'll move on from that. Earnings report. That's the triple play or the beat, the three-peat, whatever we call it there. Beat on earnings, beat on revenue, and beat on raise their guidance as well. And lastly, if you fly Delta, they're kind of like the airline everybody loves right now. Wi-Fi is going to be free on Delta starting next month, actually. They're going to be rolling it out little by little, something they say they've been meaning to do for a while, and now they're apparently going to do it. They spent $1 billion, by the way, to make this all possible. So none of those $5 fees, $8 fees, or whatever it is. It'll just be what it is. The stock was higher by 2.4% on the day. In our Jazz After Dark class, that's public, it's free for you if you want to come watch. Yesterday we talked about how to maximize your retirement savings. Tonight we'll be talking about planning for unexpected expenses in retirement. Remember, when you're working, you have your emergency fund and you're like, okay, so I lose my job, right? I better have an emergency fund. Well, there's still emergencies in retirement. And so we'll talk about how you kind of plan for that, how you can maybe use some trickery to make sure you don't have to go back to work, because nobody wants to do that. Also, on our research site, we have data on the bull and bear market transitions there. We've got a calendar of January to tell you all the events that are coming up, the stock market performance on each and every single day, and, of course, the economic news that's coming out. That is up, right? Yes. That is up. That's officially up there. If you'd like to join, jazzwealth.com/research. I believe it's $13 a month. All proceeds go to support Drum Corps International, and more to come. If you're a client, it's free, by the way. We will see. And I'll start pulling up your questions here, see if I can help you out with anything that you have. How about this House vote thing, though, huh? A little fun fact for you there. 9 votes in a row, or 9 rounds in a row. The last time that happened was 1855. So once again, you guys are living through history. Now, that's not really stock market related, so I don't talk about that too much. But if they're going to go 9 rounds. 1855. None of us were around to see the last time that happened. And a fun fact, the most ever, I think it was like 188 rounds. It was something of that magnitude, which was way back as well. So 9 rounds is a second place, but if we end up going the 100+ rounds, this will continue through the summer. So, I mean, at this pace, it would actually have to continue through the summer. So I don't think that happens. But what happens, by the way, in the government when all of us that are outside the government, what happens when we all go, hey, we want you to make progress, right? We want to stop the division. We want to get to work and do some things here. That would be the day, right? When we kind of force them to get back to work. 535 of them, supposedly 300 million of us. Anyways, I see this comes up here, so let's go back over here and see if this is going to work. Yeah, something's just wrong with this thing. It's like not typing every letter. But so I may not be able to pull up symbols for you. I'm sorry. Oh, that's kind of working. So the question was, Starbucks breaking 105 this month. Well, can it? Absolutely. Yeah, so you already have a relatively strong stock that's already sitting basically at 105 anyways, and it has the rest of the month to do it. I would say it'll hit that. Yeah. One good day in the market ought to do the trick. Yeah. I got y'all fired up about politics now, huh? This is not that show. I was thinking that earlier. I'm like, what are these guys bickering about? Why can't we get stuff done? Like, it's crazy. Walgreens raised guidance for the quarter. Is there any reason to being a recent currency flux? There it is. Was it Walgreens? Let's see. Walgreens. Yeah, better expected earnings. I see revenue came in better. Yeah. Guidance. Oh, look at that. So maybe the drinking word of this earnings quarter is going to be currency tailwinds. I doubt that they'll say that too much. It'll be more like they didn't have as much anticipated currency headwinds. That's probably what they'll say, but very cool. Yeah, I didn't see that, actually. I saw Walgreens reported, but I didn't read through it too much. Yeah. Alibaba's attracting a lot of attention right now. Yeah, the sort of the easing of restrictions over there, the easing of the technology restrictions. Remember, in China, the government controls what you can and can't do with your business. So it's a little bit different here. Well, it's quite a bit different here in the States. And so they're really relaxing a lot of that now. And I think it's pretty clever that when the rest of the world's starting to slow down, they start reopening, getting back to work, start spending, get everybody moving again, relax some of their restrictions, and try to build on top of their dominancy there. So that's pretty smart. Yeah. DTC, unremarkable to me, but your cousin's company got acquired by these guys, so you're curious. Well, what does that mean for your cousin, though? I mean, maybe they spent all their money acquiring your cousin's company. So, I don't know. I see a lot of price targets in the $6 and $7 range, but I haven't read through any of those reasons why. Yeah. Sorry if I missed any questions there. Yeah, it'd probably be good for your cousin. Yeah, I love it. Yeah, good job on the Chinese stuff there. Looking good in the short term. Remember, they're volatile, so those stocks, they give good and you're happy, but when they take from you, you just got to be ready for that. So don't freak out if you see a 3% down day and you're like, oh no, that feels a little bit weird. That's normal. The Chinese markets, their volatility in anything, really, their real estate markets are extremely volatile when you compare it to the United States. So kind of fascinating. Well, I don't know, maybe not compared to last year, but generally, yes. All right, I will wrap it up there and call it a good day. We will see you later on Wine and Wealth. If you're one of our clients, of course, we'll join you there. It'll be later today. And then we have our Jazz After Dark for those of you that don't like us for some reason, don't want to join us. Okay, I understand. We will see you again tomorrow. Adios.